What's up then, traders? Welcome back to another video. Welcome back to the next part in the My Forex Funds Challenge. After a pretty disappointing session in the last video, we're hoping to make it up for it today with a trade lining up here on Aussie CAD. So let's get into it. Well then guys, jumping into the charts here, and basically we're looking at this trade just here, okay? It is a breakout trade, and we're going to go for the entry there. I've just taken the entry. It's a 50 cents lot, okay? And we're going for our, basically targeting a 1-to-1, like so, okay? Now this is a trade setup that we use quite often, but for the last little while, I've been working on a new strategy to eliminate as much risk as possible. Okay, so basically what we're going to have or potentially have here is the breakout trade where we've had a push up. Now we've broken this candle's low. Okay, now normally we'd have a 1-to-1, which is a 12 pip stop and a 12 pip first TP, but what I've been working on is bringing stop loss down to give us a greater risk to reward. Okay, so basically what I'm going to go for here is a 3 pip stop. All right, which I'm hoping it can hold up. Now usually what I do is use the candle which has just broken the candle's low as the stop, but today we're going to go for just above this price action wicked candle here, and hopefully that can hold for us. Basically that gives us a 1-to-4, nearly 1-to-4 risk to reward ratio. Alright, we're not looking so good at the moment, not so hot, but hopefully we can keep this holding. Let's go down to the 1 minute and see what that's looking like. Nearly getting stopped out here, but not quite yet. Okay, hopefully we can get a turnaround. Okay, actually haven't been stopped out yet because I didn't actually get the first TP in. So I'm gonna pop first stop loss just above this high to give us a 1-to-2 risk to reward. Okay, and I can show that we're still in the trade here. I was a little bit slow on getting that first TP in, which would have been a loss there, but we're going to see if we can hold here with a 5.7 pip stop. All right, a little bit bad on the risk management there, but that's okay. Sometimes that happens. So basically the idea is, and I'll show you an example which I just had today on EuroCAD, which worked out beautifully. Basically we've just been stopped out, I can see, brilliant. Similar setup, right? We had a breakout here, price pushed up, we then pushed down. I then went to the lower time frames. I put my stop loss just above the candle which broke the low, all right, which was this candle here in fact, but I put it above this high for a 7.5 pip stop, and then price just melted down and it was beautiful. That didn't happen here, unfortunately, and I don't know why we got stopped out there, because we didn't really, I don't know why we got stopped out there. So that was a loss of $19. So to be honest, the last two trade sessions have been pretty crap, but we're going to see if this one can turn around and see if we can get another entry here. That would obviously be ideal. We are retesting the high, sorry, the lows there. Okay, you can see on the 50-minute we've just retested the lows. So we'll come back in a minute and see if we can get another entry. If not, then this is a loss of $19 on the day. But hopefully we can look to continue the session and find another trade, or even another trade here or on another pair. So let's see. Well, I think, guys, so we got another entry on the trade here, which was pretty nice. We had that reaction away. Ideally, what I wanted to do was wait for this candle, which broke the 30-minute candle's low, to print and then pop my stop loss above here. That would have been the most ideal thing. Obviously, we got stopped out with our stop loss, which we put in a fairly nice place by the My Forex Funds spread from this chart. So now what I've done is we've taken a re-entry on the break of this 5-minute candle's low, and we put our stop loss just above this high here for a 3.1 pip potential loss. Okay, it's a 50 cents lot again, and I have matched it up to the My Forex Funds on MetaTrader 4 this time. So hopefully we can get a push down. Now the idea behind this new risk management strategy is, after lots of testing and lots of brainstorming about how I can create this strategy into a more profitable strategy, more than it already is, was by somehow creating a better risk to reward ratio for it. So what I had before was, if we're looking at the 30-minute chart, and you'll see this in some of the previous trades, once we get a breakout or fake out of the Asia lows or highs, I would then have my stop loss sort of above the recent candle high, and then we would go for our entry, which would be technically down here at this point for our 1-to-1. Okay, but obviously we're entered a bit higher now because of the change. And then I have a 1-to-1 trade that could potentially go in a good direction or a bad direction. And obviously if it goes in a good direction, which it does more than it does in the wrong direction, which is obviously good for a 1-to-1, then it's great. But if it goes in the wrong direction, then obviously you just go back a whole level because it's a 1-to-1 and not a bigger risk to reward. Now, I'm not a great believer in needing a huge risk to reward, but there's no point in over risking more when you don't need to. So I decided over the last week or two to find a way to change that, and that has been by coming down to the 5-minute chart after the entry and placing our stop above the 5-minute candle, which breaks a 30-minute candle's low. Okay, so the 5-minute candle in this 30-minute candle, which created this break, that's where the stop loss is going to go. Now, if I show you the example again on your order from this morning, you can see that we had a breakout here of this candle's low. Okay, and then when I went down to the 5-minute chart, I found the candle which did that, which is this one here. Okay, you can see this was the candle that broke this candle's low out of here. So I put my stop loss above there, and then allowed a runner for what was it, for it's a 2-to-1. Okay, oh, for God's sake, 2-to-1, which is a lot better than a 1-to-1. So that's basically it, and the back testing has been very successful, and I'm very happy with it. There's also a chance, obviously, after a little while, to bring our stop loss to break even, which will also help out with the risk management as well. So we'll see how this goes. We're taking a second entry. Hopefully, you don't get stopped out on this one. Otherwise, it's going to be 2 bad videos in a row, and that'd be really crappy. But also, another quick one is that because we are now risking a smaller amount, aka a smaller pip size, we can increase our lot sizes because we're only risking a smaller amount for a potential bigger gain. Okay, now obviously if we get this trade, this takes out the loss we just had and we gain an extra 4 times the amount on top of that. So right now this would work out for, let me just work out the amount. So on AutoCAD, 0. There's a fly on my keyboard. Summer is here in London, and we're looking for 14.8. Let's be accurate, 14.8 pips. So this will end up being a potential $55 trade. Okay, and we would only be risking with a little bit of, got to remember the spread as well. Let's say 3.1. Risking about $15 to potentially make $55, which is obviously great. We're pushing down to profit now. The most we've been in profit actually since we've taken the second entry, which is great. That 30-minute candle's flipping bearish again, which is a great sign. Okay, we have got lots of nice clean traffic down below as well, and this fair value gap and a demand zone, which is in, I believe, the discounted range. Yep. So we got a nice area for price to potentially come and visit down there. Currently $5.62, $6 in profit. In fact, I've got it screen recording now, so you can see that. So that is looking good. All right, we're looking nice. Now remember, obviously, if we had our full entry here, we'd just be going into our profit now, and this would be our first TP. So I'm liking the strategy. Okay, I'm liking the new change in the risk to reward. Hopefully we can get a nice push up here now and then flip bearish again. But it's a good sign that price is looking to move to the downside, potentially come down to this demand zone, which created this big push up. We also, another point of interest is that we made a high here, but we haven't made a new higher high yet, so price could be looking to come down to the 50% mark to then create the push up and move up to the upside to make a higher high, or we're going to come down and break this low, changing the character of this upward trend here. So lots going on, but hopefully we can make back that loss from earlier and even make up the loss from yesterday, or at least a little bit of it. So let's see how it goes. Come back in a minute. Alright then guys, I've just got back in. As you can see, we got absolutely roasted again on that second trade, losing us another, I think it was like $13, yeah, $13.50, so we're down $35 today, which is just under, it's about 0.75% on the account. So we have dropped down in total now to around 140. But I have recently, while I was out, entered another trade, which is currently in drawdown, but it was a nice looking setup that I just stumbled across. So I took the entry, okay, and this is actually a 15-minute supply demand zone. In a nice area. So you can see that we're on GBP Aussie dollar, had a nice move up, we had this big push down, and then from this area we had this big bullish pressure which broke a little bit of structure to the left here. Okay, we broke this structure here and we have pushed up, and it's just a textbook looking demand zone, which I really like to see. Okay, we've got 1, 2, 3, 4 candles, even 5 bullish candles here, and price came to visit the zone. We took out all the fair value gaps. If we go down to the 1 minute chart, the lowest fair value gap was actually, we didn't even have one on the 1 minute, that's why I haven't drawn any in. On the 3 minute though, we had this one here, as you can see, which is at the top of the zone right there. And on the 5 minute, we got any on the 5 minute? No. So basically, we just had that nice entry because it was a 15-minute demand zone. I took the buy on the 15. All right. So when we got that break of a candle high here, I took that buy, and since then we've been messing around at the zone. But some price action showing rejection on that 15-minute candle. We got we're only halfway through this candle, so hopefully we can get this candle to push bearish. To push bullish and then break up and continue to the upside where we can manage to trade from there. So basically that's what we're looking for. We're currently about $37 down. I've got a 50 cents lot on this one, which is quite high, but if we can get up to this point, then we're going to be looking pretty good. So yeah, textbook demand zone here for me, looking very nice, and hopefully we can get the push up. So we'll keep managing this trade as we go. I do have a meeting in 20 minutes, so I will manage that while I'm on the call and then come back to you afterwards with an update. Alright then guys, and unfortunately we got stopped out there for a loss of $67. Total loss today of $104.10, which is the worst trading day we've had on this challenge, and also actually 3 losers in a row. It's the worst trading day I've had in a long time trading at all, which is a bit of a shame, and especially a shame that it's on this challenge. But hey, there we go, that's how trading goes sometimes. This demand zone didn't want to hold up. It was looking like a nice setup, but yeah, volume didn't want to come in, and we still obviously got some visiting to do to the downside, which is just sometimes how it goes. So if you haven't already, please like and subscribe. I'm going to leave the video here, and we will move on to the next trade, and hopefully we get some of these losses back. So see you guys then. Peace.